Hey, founders. A question came up the other day about the difference between a minority sale and a majority sale. So, the minority sale, or kind of the taking chips off the table, or taking a cash infusion, or taking growth capital, just means that your investor is not controlling the business. Now, they may have elements to their investment, like it might be preferred stock, or the mezzanine loan might have certain control or negative consent provisions that put them in a position to control maybe not the business, but some of your expenses and some of the decisions you make. But generally it's a non-control investment, and it's referred, like I said, as growth capital, capital infusion, or taking chips off the table. That's different than a majority recapitalization or full sale of your business, but preparing for that is largely the same. There is typically a confidential information memorandum prepared. I think of that as like a pitch deck on your business that includes your financials. That's not going to go out to the investors in the minority capital deals or the buyers on the majority recaps or full buyouts until a non-disclosure or confidentiality agreement is in place. And, they're usually going to get a teaser that kind of gives high-level information, but not the name or location of the business in many cases. The capital sources are slightly different. They call themselves the same thing. So private equity firms, do control and non-control investments. Usually firms have a preference for one over the other, but there's some blending. So from your perspective, if you're going out to the market to raise capital, and here we're talking about where you've got a successful business that's got, net profits that you can show to potential investors as EBITDA, as opposed to early stage when you've got maybe a concept, maybe you've got the product and data or some customers, but you're raising capital against the idea of having revenues and profits as opposed to, actually having revenues and profits. So these growth capital investors are more on the private equity side of things. They're not venture capital firms, and they look at a lot of the same things that a full buyout firm would look at. And if they are coming at it from a mezzanine lender perspective, where they might, be giving you non-traditional loans and maybe even participate a little bit in the equity and have, you have interest rate payments to make to them, or if they're going to inject money for a certain amount of ownership and it's preferred stock where they have liquidation preferences or something like that, all these investors are going to look at the business in largely the same way. In other words, what are the transferable economics of the business, and how do they get repaid, or how do they make money when the business is sold down the road or when you repay the loan? So look, it's very, very possible and viable if you've got a great business and you're not ready to sell, to take in growth capital so that you can de-risk a little bit, maybe take some chips off the table, to kind of take care of your family or protect yourself a little bit and grow with somebody else's capital. If you're willing to let them into the cap stack or the ownership table, it might be a great way to grow the business. It might be a great way to de-risk. On the other hand, as you go out to market and look at some of these capital sources who might inject that capital or buy a minority stake, they might end up down the road be your final buyer. They might be the majority buyer. And some of those might emerge as you're going out to market for that growth capital investment. So the process with your transaction advisor, when they go out to market, it's important that they know what your preference is, but they're probably going to prepare materials that look very much the same and then just target different kinds of buyers. So generally speaking, you need to kind of be in the same posture, but when it comes to engaging with those potential investors and buyers, the dialogue is different. So thanks for stopping by.